welcome. Today we continue with the discussion on the treatment of discounts within revenue, but today's class example is going to be with regards to settlement discounts. This class example is going to be very basic with no change in estimate. So, a settlement discount. Here, A Limited had sales of 100,000 on 31st of December 2014, all of which were on credit. On 31st of December 2014, it is expected or estimated that 60% of these sales or debtors will settle early and qualify for a 10% settlement discount, i.e. if they settle within 30 days, they get a 10% discount on the original invoice. Now, during January 2015, the next month, let's say the next financial year, 60% of these debtors actually do settle within 30 days, exactly the same as what we estimated in December. Okay, the remaining debtors will settle a month later after 30 days in February. Assume that the time value of money effect here is immaterial and that there's no VAT. Two requireds I want you to do. First of all, we're going to calculate the revenue recorded in December in profit or loss, and then we will ask you to journalize the complete set of transactions. So let's go. First one, the amount of revenue to recognize in December 2014 equals which of these three figures? Please do the calculation, push pause, and write down your solution. Assuming you've done your question now, the question that we need to answer is the amount. So the first thing we've got to think about is that there is 40% that will get no discount, and 60% of the debtors of that 100,000 we estimate. Remember, these are all estimates. We estimate that 60% will get the discount. So I will go 100,000 times 40% will give me 40,000. Then for the discounts that we estimate, that will be 100,000 times 60% times 90%. What is that 90? That 90 is the 100 minus the 10% settlement. Okay? And that will give me 54,000. So I add those together and I estimate that I will recognize 94,000 in revenue in P&L in December. So that is answer B. Okay, so that's quite straightforward. Remember, once again, maths is not yet enough, okay? You are an accountant, you must be able to journalize this process. So let's start off with the journal in December 2014. Now we're going to have some working to do here, but I wanted to show there's different ways that you can recognize the settlement allowance, but the way we will do it practically here is we will go debit receivables, and we're going to separate a gross receivable from an allowance account. So I'm just going to call that receivables gross. That goes to the statement of financial position, and that is per the invoices of 100,000. Okay. Very important, we need something to recognize or reconcile back for our VAT records. The other side now is going to be also a receivable. Oops, almost spelled it wrong. Receivables. But we will call this an allowance account for settlement discounts. Okay, and we worked that out in our previous example. What do we say it's going to be worth? The 100,000 times 60%, and here I'm just talking about the allowance, which will be 10% of the 60%, therefore 6,000. We do your referencing, so I'm going to credit 6,000. Please take note that these will be netted off in the statement of financial position, and the total therefore will be 94,000, exactly as we recorded previously. The other credit, here I'm going to use the net approach here for revenue and net the revenue off, and I will go credit revenue in profit or loss, and that will be 94,000. Okay, remember this is in December 2014. Now, the next journal will be a month later, within 30 days. In January, we actually receive the 60%, if you recall. So I will go debit bank, and the bank will be debited with the 100,000 times the 60%, but remember these guys are going to deduct the settlement discount as well, so times the 90%, and I will receive the 54,000. Okay, what else I need to do is I need to remember that I must debit the allowance account. I'm going to abbreviate here because I'm running out of space. So the allowance for the settlement discount, and that is the 6,000, because we were exactly accurate with our estimates. We got exactly the right percentage. 60% of the 100,000 settled within 30 days. And the credit will go to receivables, but the gross receivable. Remember, both of those are financial position accounts. And that was the total receivables now of 60,000 settled. Please remember, once again, it's the same as if I went debit bank, credit receivables, 54,000. All I'm doing is I'm separating my receivables into two line items to create an audit trail, to keep the gross amount separate from the allowance for settlement. In the next example, when I do a change in estimate of the settlement account, then you will see the reasons why. Please don't forget, the last thing we had to do here is that in February, we received the final 40%. Okay, and please take note here, this is not early settlement. It is purely just a normal settlement receipt. Okay, and here I'm going debit bank with the remaining 40,000 of the 100,000. And I will go credit receivables, and I'll take this to my gross receivables account. Please remember, financial position, get your mapping right. And that is all she wrote. Nice and easy. The next example on settlement discounts is going to be a little more tricky. Please do it shortly after this. Thank you.